Hello, I'm David Durant of RapidGen Software. In this video, I discuss the subject of digital decisions with Jan Purchas of Lux Magi, who has had over a decade of experience applying digital decisioning in finance and insurance. Welcome, Jan. So, what is digital decisioning?
Well, David, it's a way for businesses to define and manage their important day-to-day business decisions so they can be better understood, verified, improved, and automated. This increases the value of business decision-making and also reduces the risk.
Business decisions, do you mean decisions like mergers and acquisitions, product development, hiring, initial public offerings, that kind of thing?
No, not really. What I'm really talking about here is operational decisions. These are decisions that larger companies make thousands of times a day when they conduct business with their clients. They control how client requests are handled. For example, if you're a bank, it might be whether or not to approve a loan request from a specific client. If you're an insurer, it might be whether to expedite the payment of an insurance claim or to start some form of investigation. If for other businesses, it might be how to determine which products to offer existing clients to maximize the chances that they'll stay with you. Now, these decisions are very important. They impact the day-to-day relationship between a business and its customers. They shape the customer experience. They determine the degree of regulatory compliance that a company shows, and they can impact profitability. Collectively, they define the company's policy. So when these are automated, we call them digital decisions.
Surely large companies already have systems to automate these decisions.
That's true, but many companies automate decisions by converting them into some sort of technical asset. For example, a piece of programming code or a complex spreadsheet. This means that business subject matter experts and stakeholders who don't understand this asset can become rather distanced from these systems. They can lose their understanding of how decisions are really made. Important business knowledge becomes buried in the code, if you like, and only programmers or Excel experts can really maintain a detailed understanding of what's really going on.
Okay, so why is that such a bad thing?
Well, when these key experts leave the company, their knowledge goes with them. So the company's understanding of the true behavior of their automated systems can be compromised over time. When policy know-how is buried like this, it creates a permanent barrier between the company's subject matter experts and the way in which automated decision-making really works. So they can't be sure that decisions are really being made correctly or if they're consistent with the company's written policies. This barrier also makes it harder and slower for experts to improve and innovate policies or adapt them to changes in the market. In addition, the process of translating from expert requirements into this technical asset is slow and can introduce errors itself. Also, it can be hard for businesses to understand the true business value delivered by decisions. How is each decision contributing to the bottom line? How do we measure success? To resolve all of these issues, we need a separate representation of business decisions outside the code, one that all business stakeholders can really understand and help contribute to. And these are called decision models.
Okay, thanks, Jan. Remind us, who are these subject matter experts?
Well, these are people already inside a company that really know the business very well. They have deep expertise in the business operations, processes, decision-making, and strategy, either for a specific part of the business or sometimes across the board. Now, a few of these people can be familiar with spreadsheets and even programming, but many are not. Often, they're quite frustrated at the lack of transparency of their company's operational systems and how long it takes to implement new or improved policies.
How does having yet another paper-based model of the decision logic help? Surely it adds to the paperwork.
Well, remember, decision models are not paper-based documentation of business decisions. They're visual representations of decision-making that are executable. They both define and implement business policy. You can even build automated systems around them. But most importantly, decision models can be understood by subject matter experts and even maintained by them. They are expressed in clear terms using concepts like decision tables, and they use visual depictions of how decision-making works so that more stakeholders can understand and modify them. This means your experts can create and contribute to digital decisions directly.
So how does this work in practice?
Well, it means that subject matter experts can experiment with a decision model. They can present hypothetical business scenarios to it, and it will tell them what the outcome is in those scenarios. And it will even explain why the outcome was the way that it was. Because decision models represent the defined business policy and the automated implementation of that policy, they're never out of date and they're never inconsistent with stated business policy. And this is the essence of digital decisions, and it's what makes them more agile. Decision models can also include a definition of how to measure their business value, their key performance indicators, or KPIs. A decision, for example, could have a KPI of improved profitability, or better client retention, or faster issue resolution. You can use KPIs to monitor the performance of decisions in real time. You can set performance goals for them, and you can even identify which decisions are performing badly against these targets. Decision models are more transparent. With code or spreadsheets, the explanation of a decision outcome is very often lost in the technicalities of the implementation. Decision models are visual representations of how your business logic works. They show how each decision depends on defined sub-decisions and on the value of input data. They can therefore explain their own behavior in business terms. And for these reasons, decision models are very easy to understand and fully accountable for their behavior.
What other benefits do digital decisions have?
Well, aside from making business decisions more transparent, decision models are also an excellent way of integrating artificial intelligence and machine learning into your business decision making, and can support regulatory compliance as well. In our next video in this series, we'll be illustrating in more detail how this is done with some examples.
Thanks, Jan, for your insights on digital decisions. I look forward to further discussions. For those of you who want to know more, please use the link shown to access further resources to help you.